investors. The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Daryl Martin.
Welcome, folks. You get Tom O'Brien. Tom O'Brien, we appreciate you growling and prowling out here with us. Right now, you get the Dow Industrials down 24, Nasdaq's off 8, S&Ps are off 2.5. We have the gold contract down $6, silver is up 5 cents. Bonds, the 10-year is up 12 ticks. 30 years up 1.5. We get the King Dollar up 100 ticks. And folks, if you haven't test drove the Nadex platform, come over to our website at TFNN. You can see the banner on the top, on the side. You can hit that banner. You can bring up the platform that put $25,000 of paper money into your account. You'll see how these contracts trade, and we have option expiration, Tom.
We do.
So what happens, on option expiration, and this is where this is always wild, okay, is that the S&Ps expire on the open. Okay. So what tends to happen is that there's always high volatility inside the market.
Sure.
Now, what's really wild is that we're at highs.
Yeah.
So it's like, okay, man, are you going to break out? You're going to go top side? I suspect, it's not going to be able to handle it. But this is the third time that we're up here.
Yeah.
And it's like, okay, man, you've pressed. Our first get-go out of the gate, what you had out here, if we just take a look at these E-minis for a second, if you take a look at these E-minis, what you have is that the first get-go, the second get-go, you can see these are a 10-minute chart that it's all volume. It's all volume on the way down. Now, what's going to get interesting here is this, folks, is that we're at the 12:15, and the 12:15 is what it has to break, and that's from the 1,500 hours yesterday. 1,500, 350 actually. Okay.
Okay.
But you break that, and this is where either your spreads come in for the Nadex contracts, or the binaries come in. Because if you break that, you can see that you don't have a little support there at the 2109, but that opens up the 2106 right over there.
Yeah.
That kind of, if you look at those floors.
If you go out 12 points on the S&P for a binary, you're going to get probably 3-to-1, 4-to-1 on your money.
Well, there's no doubt. I saw Jay. There it is. Well, actually, we were talking about it. We were talking about it on the open. That 2109. Okay, that daily 2109 was only it was either $12 or $20.
Okay. Either way,
if we pull it up, either way, that was a pretty wild deal.
I'm just looking at the S&Ps. I'm going to pull up some binaries.
Okay.
So for the dailies,
yeah,
that's what 2109.
Yeah.
So right now. Yeah, we're 21.15, so you're getting 3-to-1.
Right there. And at the beginning, it was $20. Okay, it was $20.
That makes sense, sure. Right.
Okay.
So that's 4-to-1, $20.
Yeah, which is pretty
nice.
That's
I like those.
And particularly on an option expiration day.
Right.
Because what tends to happen here, folks, is this. We're at highs.
Just pulling up the chart. Let's talk about it. Yeah.
Right. We're coming into the summer. So,
just look at the volatility on that chart.
Exactly.
And you're talking about 5 points for the day.
Right.
Getting the 3-to-1 on your money.
Exactly. Okay, so let's talk about, we were talking about this earlier.
Sure.
And so they changed the numbers on the NASDAQ.
That's what I got it from Daryl.
Right.
And I think it was Daryl's show early this week on Tuesday, maybe.
Right.
That he was
they
talking
change
about
how
it.
they tick.
And I think he talked about it on this show last Friday.
Right.
That they tick in 0.1.
Okay.
And that's $1. So we'll pull it up. And so you're getting a 40-point NASDAQ spread that and for each tenth of a point, it's $1. So that's a 400-point spread. So what's nice is on 40 NASDAQ points, you're getting a 400-point spread.
I got it.
Whereas on the Dow contracts, for 400 points, it's a 400-point spread.
Wow.
So percentage-wise,
That's insane.
yeah, percentage-wise, 40 points in the Nasdaq
Right.
is easy, and so you're
You know what's crazy
a
about
tenth
that?
of a point versus a full point. You know,
The thing that's pretty great, well, it's great about that, is that the volatility inside the Nasdaq is always heavier than the Dow.
always.
Well, no, okay. It just seems to me that it is okay. What happens is this: is that the volatility inside the Nasdaq pushes very quickly. You know, it can go up 4 or 5 points and down 4 or 5 points in a heartbeat. So 4 or 5 points in the Nasdaq is actually times 4.
right.
In the Nadex.
Exactly.
So 4 times 4 is four times 10.
You're getting
No.
really quick with all those numbers. I
Okay.
lost you a little bit. I did.
Okay, so
The 4 by the 4. I mean, no matter what you're doing, it's a tenth of a point is the same versus a full point in the Dow. And that's a much smaller percentage-wise move you need for the same exact full spread contract.
Right.
So, you know, what I was talking about is when you get in those spreads and you look for a 3-to-1 or a 4-to-1,
Okay.
what you really want to see is to make sure that sometimes you're going to get the full movement of that spread in a day if your contract expires within that day. Well, when you're talking about 40 points in the NASDAQ, you're going to get that all the time as opposed to 400 points in the Dow. That's how I
Totally.
look at it.
No, totally.
So that's right there.
Right.
You're talking about a 400-point move on each of those contracts. So we're in the spreads.
Yeah.
Here's the NASDAQ 100. You pull up the daily. Now, some of these have an 80-point spread, too, which
Wow.
is a nice, I know. Now, that's an 800-point spread, depending on where you get it.
okay.
Right now, you're going to have to pay, you can see that right now it's trading at 44.84.
Yeah.
Pull this up. This is the 80-point NASDAQ spread.
Yeah.
So that's pretty close to market, but the reason why it's pretty close to market is because let's say you want to sell one short.
Yeah.
You're going to be risking 448 to make 352. So that's basically splitting the market,
Right.
you know, which you don't have to do. But what's great is that sometimes you can get great risk rewards on these 80-point ones where you're only risking maybe 150 or 200 with a cap of 650.
4484. Interesting. 4486. I'm still. Can you
Yeah.
leave that up just for a second? Because I'm
Sure.
trying to figure. Because is that this is a spread, right?
This is a spread.
But aren't we near the box? Oh, I see what's going
No,
on. We're
this
not near the top of the box. That's
We're
what's
literally
going on.
right in the middle.
Right. That's what I thought.
45.30.
Exactly, right.
And the bottom is 44.50, and we're literally almost right. The middle would be 44.90, and we're at 44.85.
Yeah.
So we're pretty close. And that's why you're going to have to put up slightly more because we're slightly lower to the box.
Right. Are there any that are near the top of the box?
Yeah, so right now the NASDAQ 100, 44.85.
Yeah.
So 44.90 would be a good box.
Okay.
So you're going to pay about a 5-point premium.
Yeah.
And as a result, you're going to be getting about 3-to-1. We'll put it in. If we're going to sell one. So we'll be risking 108 to make 292. Now that's, you know, we're paying $5 premium. If it expires right where it is right now, we're going to get back about $50. So we're paying about $58 premium. But, you know, if it runs down to just $44.50, that expires worth $400, the whole contract.
That's sweet. Okay, so let's
Yeah.
pull up the NASDAQ futures just for a second.
Go ahead. You're okay.
So this is pretty intense, man. I got it.
Oh, you got it now.
I got it now.
Okay.
Sorry.
Yeah.
I know. You're going to kill me. Okay. Okay, so let's take a look at this. So the first... Okay, so on the NASDAQ futures, now see, this is what I really like, too. I always like when you had these wicked big spikes on the
Yeah.
other side.
Yeah.
Because it's like, what you got to be looking for, folks, you got to be looking for, okay, what am I going for?
Right.
Do you know what I mean?
Where can it realistically go?
Yeah,
For
it
sure.
just can't be like out of the blue.
I love looking
So-
at trading ranges, you know, blood rolls, looking at those trading ranges. Where
Totally.
can it go? Even this morning before we came on the show,
Yeah.
it's like I would love to see it go down, bounce right back up, maybe
Right.
go down again, bounce back up, and
totally.
then you just pick a nice risk reward at the top. And
You do.
Yeah.
You do. So here, watch this. This is what's so crazy about this too. So this is what's holding this up right here. See this right here?
Yeah.
Look at that. That's 87 right there.
now the
So-
other side of that is we're only at the close of yesterday, and yesterday was a huge up day, so that could easily just pull back into yesterday. We're right at the close.
No, for sure.
It's not even. Look at how we came down to start the day off. So
Right.
obviously the market wasn't comfortable being above where we were at the close yesterday.
There's no doubt. And so the next move
Yeah.
would be there, which
Yeah.
is 4463. Now that's a big move.
It is.
If that's the case, because
Right.
44.63.
Right, 44.63. Now, if we just bought that spread that we were looking at,
Right.
we're going to get 270 back because 44.50 is the full value of the spread.
Right.
So 44.63, we get about 270 back. We're only putting up 108, so we're still almost making 3 times on our money. And the other side of that is if it just goes down 5 points from here to 44.80,
right,
we get back our initial investment.
Which is dynamite.
For the whole day.
Right.
Yeah.
For the whole day.
For the whole day. We're risking 108.
You can't do that in the futures market.
Yeah. I mean, if it spikes huge, we're capped out at 108, which is nice because
that's right.
As we've seen
in the futures market, what happens is that there's no doubt that $5 is $100.
Yeah, and
5 points is $100. Right.
Right. And Daryl was going over, in terms of the Nasdaq future, you have some almost comparative exposure using the Nadex spreads now, with 0.1 being a full dollar.
For sure.
Yeah.
For sure. Because if you take So
every point is $10 in the Nasdaq by putting on a spread.
That's.
And I'm. Why don't you pull up the futures to see exactly what is the?
I'm glad this is what it is.
I think it might be 20.
You're putting up 3,900 for in every tick size. Every point is of $20.
Right. So Daryl, and that's what Daryl was going over. The guy to look at it.
And that ticks by 2.5.
Right. And so all you need is 2 spreads, and you have the same exposure as a Nasdaq futures contract, which is pretty wild.
That's amazing, man.
Yeah. I know. No, it's heavy. It is.
That's like, why would you wouldn't? I would just assume, because the Nasdaq futures folks, okay, they bump 4 or 5 points both ways in a heartbeat, man.
Yeah.
I mean, that's a no-brainer. Now it gets really cool.
Yesterday, what are the 40 points?
Now watch it so cool, and this is what's cool about the Nasdaq futures. If you're trading the futures, you want to go over to Apple.
Sure.
Because Apple's still, I think, 14% of the future, maybe 24%.
No, we should know exactly. It's huge, though.
Tom O'Brien, you stay right there. We're coming right back. Dow down 26, Nasdaq off 10, S&P's off 3.5. We're going to be right back.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
$6 or something, right? Not quite.
Welcome back, folks. Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow down 19, Nasdaq off 7, S&Ps are off 2.5, and they can't keep that gold market down, folks. Gold's at 1222.50. Nice run top side. The dollar just got destroyed. The dollar just came down 400 ticks. Can you imagine? Yeah.
It's a lot of big moves right now.
That's a lot of big moves, man, no doubt. Now, let's talk about this one here, because what we have up, folks, is that you have, Tom and I were just talking about the break, if the NASDAQ could do just a little bounce up here, right? We're at 44.85 right now.
Yeah, 44.80, yep.
And we're looking like, okay.
It would be nice if it bounced somewhere back up here at least, right?
Right, 44.92.
This is 92 we were talking about.
And you're saying that if it bounces back up there,
that
top,
would be a nice spread.
Then the top of the box is 44.90.
Yeah.
But realistically,
you're not going to be able to sell it at 44.90 because you'd get it for nothing.
That's right.
If this jumps up to that 44.92, you'll see this market be 44.85 by 44.
Which is sweet.
Which is sweet. And what you were saying is right. Is 44.85, then you're going to be paying about $50 with your max risk.
Right.
And your max gain of 350,
which is huge.
Yeah.
Well, it's particularly huge because you're talking.
89.
Okay,
so here we go. We'll see it taking up 44.81. We're almost at.
Right.
So we'll see how close it gets, because just like we're saying, that's an attractive option for $50 when you only need to move 35 NASDAQ points to get the full move of the spread. And that's what I always talk about. If you're going to get in the spread and you're going to pay for that option,
right,
as in you're going to pay for the ability to make money for it to go the full length of the spread, it better go the full length of the spread sometimes, because you're paying for that.
That's right. Now, what's cool is that the market will deliver more information to us, too, as it gets up there.
Right.
Because if you get up there...
We'll see how it trades, right?
Exactly.
It starts if you skipping around, maybe.
If you get up there with a lot lighter volume, say, okay, man, you get a bounce going. If you don't have that wide price spread, accelerated volume, big difference. Do you know what I'm saying?
I know. It was a big move off the open, of course, and I was watching it. But then, I mean, look how it goes all the way down to 44.88, kind of right where we are.
Right.
And jumps up 10 points in nothing.
Yeah, no. How cool is that?
Yeah.
And it looks like it's going to do it again.
Yeah, right.
And it makes sense, folks, because what you have is this, is that option expiration itself. So you get a picture of something. We're at 10:30 Eastern Standard Time, right? Europe's going to close at 11:30 Eastern Standard Time. Now, Europe hasn't been able to hold price. I'm looking at the DAX right now. The DAX was up earlier, now it's down 105 points. Okay. And that's kind of neat. Do you know what I mean? Yeah. Not that they don't correlate all the time, but that's a good scene, particularly because it was already up, backing down. The FTSE, same deal. That is basically losing strength. So what tends to happen is that if they're down coming into their close, the probability gets a little bit higher that, guess what?
I'd agree.
We're going to start coming down into our close. And you can see, I'm going to bring up the NQs right now just for a second so I can see how they're trading into them. So,
I mean, and when I look at those charts too, it's like it's very easy to look at that chart and be like, oh man, look at the momentum to the downside.
Yes.
But what you have to remember is we're literally right where we closed at yesterday. And yesterday was a huge up day.
Right.
So, you know, I saw it going down this morning, and of course you'd hate to miss a move like that if you've been short. But then you see it spike 10 points, and then you have to remember you're only at the end of yesterday, and yesterday was a huge positive day.
No,
so you're sitting right where it could just keep going up too.
No, there's no doubt.
Yeah.
Oh, particularly because that's all the markets wanted to do.
Right, exactly. That's, believe me, as I was watching the market go down this morning, you know, I was waiting for the turnaround. You know, it's like,
oh man,
the first half hour, especially this week, it's been, whether it opens down or up, it seems to pull around by 10 o'clock and go the other way.
That's right. Okay, so we have the NQs up, the actual in the futures, because you want to take this, how the futures are trading into it.
Oh, definitely.
Bring it back.
If you have the ability to look at these, I mean, we're fortunate for sure, but it plays into it.
Bring it back into the binaries. Now, so watch. This is really cool. We went down with 13,000 contracts. Okay. The first get-go, we went up with 5,000 contracts last 10 minutes. This is beautiful because what you'd love it to hit. The bottom, what they love to do, just in general, the bottom of that is 4492. So that's what we're looking for.
Yeah.
You know, that's the bottom of that. You know what I mean? So as you go up, you come into that, you hit the bottom of it. As long as that volume's light, it's like, okay, that's not a bad trade. Well, we know if we were trading the NASDAQ futures, we wouldn't know that our risk is not defined. So you'd have to put your stop. I mean, if you're going to sell it or buy it, you know, either one, the bullseye bears could go here.
You could put
either
it at
one.
4,500 or something.
But on the binaries, the bottom line, if it was costing you $50, $60, that's it. You're in.
Well, that was the spread. That wasn't even a binary. That was a spread.
That's right.
And it was still capped out at $50.
That's even better. So if we bought two of them, it's like one of these.
Right. And
that's
we capped
crazy.
out at like $100.
That's crazy.
And we can make 700.
Right.
Yeah.
That is where it's at. Tom O'Brien, you stay right there, folks. Coming right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow on 26, Nasdaq's off 8, S&Ps are off 2.5. And what we were just looking at, folks, and this is really cool, man. I mean, we were pulling up the Nasdaq, okay, the NDX futures, and if
You can bring that over here so they can see it too.
yeah, okay. So I'll put this up here first, and what you can see is that the futures themselves, okay, it's $3,960 a contract.
That's what you need to put up, right?
That's what you need to put up.
What you need to have in your account to create one contract.
Right, and that contract there, each point is at $20.
Right.
So 2 of the NADEX contracts also equals 1 NASDAQ futures contract.
Exactly.
Okay.
Same point for point. Every point move, you're going to be $20.
Right.
Yeah.
Which is huge now, and what Tommy was just bringing up in the break. Okay, and this is really cool. Now, wrap your head around this for a second, because so if you can walk them through,
we're almost right now in the middle of some of these spreads. We're at 44.85 almost. 44.90 is going to be the middle of the spread.
Yes.
So this is an 80-point spread. So if we had 2 contracts, and that's going to give us the same exposure, we need 2 of the contracts. Right. So at the market, we're putting up about $800 to make $800 because each contract's going to be an 800-point spread.
Right.
Now, what's so cool about this is that you're putting up $800 as opposed to having to put up $4,000 for a NASDAQ futures contract, and you have the same exposure as long as it moves 40 points in either direction.
Right.
Now, you're not going to gain the profits if it moves with you beyond that, but you're not going to get the losses if it moves against you beyond that.
And realistically, you know, I had said to Tom at the break, folks, when you're trading the futures intraday, you're not looking for 40-point moves.
Right.
That's the reality. Right. What I had just figured out there, this is what's really so cool about this, though, is that when you're looking at this, folks, because this is in between, you know, we had brought up another one. We were giving up, 10 points on the other one, right?
Well, so if we're looking at the 44.90, that's, I mean, the market, right now it's come a little bit more within the spread, so it's only a 6-point premium, basically, where the, looks like 5 points. The index is at 44.83.
Yeah.
We're getting at 44.78.
Okay.
But it's tough when...
But that's still 5 points.
That's a 5-point premium within a 40-point spread, too.
Right.
So that's...
And we were looking, if you bring the other one back up again, because so what I want to show you is this, folks. This second spread, you were giving up 3/10. Well, right now you're giving up 2/10. You're giving up hardly nothing. It's 4485.
Right.
And we're 4485.7.
Right.
So...
And the market is so tight on these, which I love, too. The bid and the ask are 1/10 of a point. So there's no, middle. There's no market in terms of the bid ask that you're getting middled.
And that's huge for getting back out.
Right,
Because
exactly.
the key here, folks, is that you don't have to stay in. These would be the same that you could turn around and say, okay, listen.
Oh, for sure.
I'm going to give myself 5 points, 10 points,
Right.
whatever that you wanted to give it.
Right.
The difference would be dramatic, though, in the aspect of what you have to put up versus, because if you wanted to turn around and put up the $4,000, well, guess what?
Right?
You're
You
leveraging.
can buy 10 spreads.
Yeah.
And then
Right.
if you're buying 10 spreads, you have 5 times the exposure than you would in that same futures contract.
They're gonna get a lot of exposure in this.
I
man.
bet. I
Yeah.
mean, that's especially if you catch a move right in the NASDAQ and you want to put on $4,000 of exposure, that's 5 contracts that you can basically have the same.
Yeah, it's $100.
Right.
$100 a point.
Right.
Then now check this out. This is what you want to wrap your head around now. Then what you're going to do, you go back into the NDX 100 because the NDX 100, folks, is a modified weighting structure. Okay. What ends up happening is that you can figure out what is the largest weightings on them, what are they actually doing.
Yeah.
And
You wanna look at Apple?
And that's a big
That's
deal.
right.
Yeah, absolutely. So if we bring this up, what you're going to look at, of course, is that you want to say, okay, what is Apple doing? Where is Apple going? Because Apple is still the largest weighting structure inside the NDX 100. And you know what? Guess what? Apple is only down 69 cents. Now, this is the cool thing here is that you don't need a lot of movement, okay?
Right.
And it's like, okay, Apple doesn't have to croak, but Apple looks like it wants to go to 127.71. Just test that bottom. Doesn't mean it has to break it. But guess what? That in itself, okay, would absolutely bring that NASDAQ down.
Right.
Now, the big thing, which I forgot about, man, this is cool. Hold it. The biotechs, right? The biotechs, they're flat right now, but when these biotechs move, okay, that's still flat. But when those biotechs move, you're talking about some monster movement.
Yeah.
And the composite first, but it goes over right into the NDX 100. Now, what you're looking at here, folks, is that what are the laggards? Okay, so inside the NDX 100 today, we have Green Mountain, Symantec, Micron, and Wynn Resorts. GMCR, same deal. You basically, you getting a little fast fingers here as you're going along, but you can see that it doesn't take a lot of movement like that. That's kind of neat. Okay. What we're looking at here, folks, if you happen to be in your car, is that Green Mountain gapped away, huge volume at the first get-go. It's coming back to test it. It's like when you look at Green Mountain. I mean, Green Mountain's already had a couple gaps in it. Green Mountain's not going anywhere.
They must have had something come out today being down like 6-7%.
What it is that Green Mountain, they come out with they're calling it coffee gold or something. No, Keurig gold, I think. Yeah, Keurig gold. But the machine's going to be so cold. Keurig cold.
Okay.
Okay. They're going to be the cold dispensers, but they're going to be so expensive.
Cold press,
Yeah, the
right,
cold
yeah.
press. But they're going to be so expensive that they actually filed a filing with the SEC, EGRA, that they're worried about. They made them so expensive.
Okay.
They
To release that information already, just because
Yeah.
it's that big of a deal.
Evidently, that's a
Yes.
material fact.
Right.
If they released it to
They had to make it known.
They had to make it known.
Jeez.
So what they did is that they released that it's going to be 250 to 275 or 300 or something. That is a lot. That's a lot
That
of money.
doesn't sound like too much in the world of coffee machines, though. I don't know.
It's
It seems
not.
like people love spending a lot of money, especially on the single cup brewers now. And
No, I would agree there, and I guess this has to do with are they going to pay that for soft drinks, right? Because that's the.
oh, I thought you were talking about a cold press. Isn't coffee? You can do a cold press where that's a different type of a brew.
Oh, really?
Yeah.
I can't see him. Let me see. GMCR. Let's see this. I
I
think
think you can do a cold press.
I think this is like the new deal that they're going to.
Yeah, I wouldn't pay that if we're talking about soft drinks. Cold beverage market.
Keurig
okay.
ready to stir up 50 billion cold beverage
Yeah, so-
market. Yeah, you know what I mean? So
Yeah.
let's see. Green Mountain's planned cold beverage system rollout in the fall might shake up the 50 billion cold beverage market.
Okay.
Even more than the company's coffee brewing has disrupted the $10 billion U.S. made nudge
No, I
PepsiCo
agree.
and others.
No one's going to pay $300 to make a Pepsi or
A Coke.
whatever they make. Yeah.
Yeah, I know.
Who drinks soda anyway? Still.
Well, yeah, you know what's pretty wild is that you see Dairy Queen is getting rid of soda and
For the
kids.
kids menus. I saw that.
Right.
Yeah, it makes no sense anyway.
Yeah. Well,
Like I said, who drinks soda? It's like the worst thing you can drink.
it
Nico's
definitely
coming
is.
up at 12 o'clock. We'll ask him what he thinks of soda.
Yeah, totally.
kids.
No doubt. Hey, hold it. Let's do this. Hey, watch this. We're getting that 90 right now in the. Let me put this
so
back up.
it's right in the middle of all the.
We're getting this bounce right now, folks, in the NDX 100 that we're basically looking for out here. 1 second. Let me pull this up. So, put this in 2 days. Look at that, just sneaking up there. So that's.
I mean, what you gotta love is that it's already been down. What was the low of? What was the low of this?
448.
About 44.80.
Yes.
So you already know that it can go to 44.80.
Right.
You know, it was there 20 minutes ago.
Right.
So I love when you can just wait and let it bounce, like you're saying.
Yes.
It'd be nice if it could bounce a little bit higher, though.
Right.
Because you're only talking about 10 points right now in the NASDAQ, which is 2 seconds sometimes.
No, it is. It is. But when you look, so check this out. This is pretty cool, though. When you look at the aspect, oh yeah, you can bring that
This
up.
is what we'll bring.
Look at that.
So, I mean, that's nice.
pretty.
Like you said, it's coming right down to the bottom here. It'd be really cool, I think, if it could come like
All the way
to
up.
here. Yeah.
So here, what has happened with the spread since
so
we've
let's
done
look
that?
at that one's the middle one.
Okay.
I don't want to look at that. This is the one we were looking at buying.
Yeah.
See, there's still. This is what I was saying as a market was moving. You're still going to pay an $8 premium.
Okay. So
Now, what's tough is it doesn't sound like a lot, but it is a lot when you're paying almost 25% of that entire spread.
right.
Then automatically, if it expires right where it is right now,
Yeah.
you're going to lose the $80 essentially. We'll just put it in to see if you're going to
Okay.
sell one.
Yeah.
It's going to cost you $83
Okay.
for risk with the max profit of $317. As it expires at $44.50, you get the full $400 of the contract.
Right.
That's great, but it's a little tough in that
So that's
I like almost. Now here we go. It's ticking. See, this is where if we can get it up to $44.96,
yeah.
maybe we're going to pay only $50 or $60, and then that goes from a 4-to-1 to an 8-to-1. You know.
Interesting.
And that's a big difference, and you're only talking about 5 points up. I mean, here we go, 44.91.
Okay.
We're up at 44. So that's where I'm almost more comfortable on analyzing those types of situations where I'm getting 8-to-1,
Right.
especially when you're just paying that much of a premium, because it's all premium.
It's all premium. Now let's go back to the one in the middle, because this is where the ones in the middle make out too.
They do.
Right. I
you're
mean,
just-
because the
like
reality.
we said, it's basically you're risking exactly what your risk is your reward.
Right.
As in, you're going to be putting up $200 almost to make $200 because you're right in the middle of a 400-point spread.
Right.
So right here, we're risking 191 to make 209. And that's a great trade if
I
you
like
just want
that.
exposure for 20 points up, 20 points
Right.
down. Now, the spread I chose was the 40-point spread from 44.70
Yeah.
to 45.10, and we're right here sitting at 44.91.
Right.
If you want more exposure, though, in terms of 40 points each way from the market, they have the 80-point spread, and this is great too. Same thing, essentially, except you're going to be risking 400 to make 400. And that's a great trade too.
That is, man.
Yeah.
That
like
is.
I said, you put on 2 of those, cost you $800. You
Yeah.
have the same exposure as a NASDAQ futures contract, and
it ticks and tenths.
it ticks in tenths.
Yeah.
And you get all of the movement from 40 points up to 40 points down from where you are.
I know.
So you're not missing out on many moves at all.
That's pretty intense.
It
man.
is.
And you have 5 hours and 29 minutes.
Pretty cool. It is.
And what's so cool here, folks, is that you can take these off at any time. This one here is an absolutely different animal.
A tenth
right?
of a point. The whole market from bid to offer is sometimes a tenth of a point. There it is, to 2/10 of a point.
Right.
So yeah. Now getting out of the binary, sometimes there is a difference between the bid and the offer.
There is.
There's a 6-point difference
there's a big-
usually.
right.
So if you're getting in on one side, you're paying 6 points.
Period.
And if you're getting out, you're paying 6 points.
Right.
So if you don't let them go till expiration, you are paying that bid and the offer.
Right.
Which is great sometimes. Like we went over it last week. You get out of it when it's still worth
$5.
Right.
There's only $5 left in that.
But-
one. Right. Pretty amazing.
Yeah.
Folks, you can test drive the platform by coming over to our website at TFNN, hit that Nadex banner, and what I'd suggest you do when you start trading them, start trading the spreads first. You're going to want to trade the binaries. That's just how. That's
you
just
told
how,
me the same thing, and of course you want to trade the binaries
Right.
because it's attractive when you're putting up a you know,
a
you're
fraction.
Only, yeah.
Right. But what you do want to wrap your head around is
these
that
are big.
I'd wrap my head around these, and I'd wrap my head around the NASDAQ ones. Thanks.
And you can do both.
Thanks.
Yeah.
He was ready to kill me, folks, because I didn't have any patience. And he's teaching me early.
It's tough to understand them. It is.
Yeah, no, this is awesome, man. It's really amazing.
Moves. It is.
It really is amazing.
Yeah. It's basically twice the exposure in terms of basically if it moves, you know, if the NASDAQ moves 1%, the Dow moves 1%, the spread is going to be worth twice as much.
And the tightness of the spreads.
Right, and the tightness of the spreads. It is.
You know.
Yeah.
And Jay loves the 20-minute fuses.
Yeah, I know. Hey, the 11 o'clock, I was trading 11 o'clock binaries this week, and I had some success and I lost on some. Yeah, look at it, it's moving now. But those 11 a.m.s, I like that because there's been so much move in the beginning of the market.
Right. Because you might get right what you want out of this. Look at you're going to get what you want.
So
this is going to be a trip.
Here we see it spiking. We're at 44.93, 44.92.
Right.
This is the middle spread. The one we were looking at was, no, let's get it up. We're on the binaries. We have too much stuff open. Dailies for the tech, and 44.90, the top of the box. Yeah, so that's tough. I want to see it go a little bit higher because I think it can pull right back down to here. And so here's the problem, right, that I see with this is that you're getting in and selling it at 44.82.
Yes.
Well, look at where the bottom was.
Right.
44.82.
Right.
All you're doing is getting in
at
this price.
Right.
So that's, I mean, if it goes all the way down there at the end of the day and expires, you have an even trade.
Yeah.
And if it expires right here, you lose all your money.
Right.
So I want a little bit better risk reward because I want to make sure if it does come back down here, maybe I can make a little bit. And you know, you'd be looking for it to go past there for sure. But I'm not okay with just getting my money back if it goes to the low it had at 10 o'clock. And it's already 11, so we're already an hour past there. The day goes quickly. You know, before you know it, the day's over. It's 44.90. You've lost it. Or before you know it, the day's over, it reaches here. And all you do is get your money back. So you wait a little bit. That's what I would do. Or what you do is you take the other spread where you risk the 200 to make the 200. Because I'm just not comfortable paying the premium there. That's what.
Right. No. I like the 200 for the 200.
That's a good trade because you're paying no premium. And you know what? If you pay premium a lot and you don't get the kind of moves that you want, that gets eaten up real quick. Because
this is the same as just doing the futures, which is where it's at. Look at that. There's no juice, man. It's perfect.
Yeah.
You're coming into 13,000 contracts, and let me see how many minutes we got left. This is perfect. So you get 3,800 contracts coming into 13,000, and that's a good setup. You stay right there, folks. Tom and I are coming right back. Dow Industrials right now are flat. Nasdaq's down 2. S&Ps are also flat. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Tom O'Brien. Tom O'Brien, appreciate you growling and prowling with us out here. Right now, you get the Dow down 1, Nasdaq's off 1.5, S&Ps are off. They're flat. And I had just said to Tom, look at it, it's dying right here, and he laughed at me.
Of course it's dying right here, right?
I know. I don't blame you, believe me. I know. Oh, my God. But look at that. I mean, the last...
no, the volume, I know.
You know, we'll see whether we can get up there.
And that kind of... I like those, and that goes to the 11 o'clock contracts we were talking about. I mean, we didn't pull them up today. Maybe we'll look at them next week. But that's why, because the beginning of the day is just so much action. And, and if you happen to be the right side of that trend, on a binary especially, on the 11 o'clocks, you can make a lot of money.
Yeah. Well, you know what's cool? Now, so watch, because what also happens is that now you can flip the other side of that, too. Meaning that you have that action up to 11 o'clock, right? It's going up and doing the retracement right then, and then that finishes that leg off. Now the next pattern develops.
Oh yeah, you go into a daily maybe at the end of that, which I've done for sure,
which is really cool.
For sure.
You know what I mean? Because it's laying right up there, and it's like so we're at 11.
They're small 40, bars. Yeah, 44.93.
Right.
And it's just ticking. And so you still see. I mean, this is the contract we have. That's the spread we've been looking at. That's a nice risk reward. 44.90 is the top of the box. And it's still about a 10-point premium.
Right.
And, you know, it's still just, if it gets down to the bottom of this trend, you're just getting your investment back.
Yeah.
And so now, I would love for it, I mean, at this point, really, the way I would really like for it to get back above 4,500. And then, you know, you're probably going to pay maybe 4 points, so you're paying 40. And, you know, you're going to be paying 12-point premium because it's got to get to 44.90 before you get a single dollar back.
No, totally. Can you pull? But I see what you're doing. What you're doing is that you're taking the amount that's up, And as you said, it was 4-1 when we started, and you could make that an 8-1.
Right.
Yeah. Can you pull up a binary that expires like at 4:15 now? Because this gets interesting.
On the NASDAQ?
On the NASDAQ. Because like we're up.
Yeah. So we're looking at, we got our binary section. Here's the whole deal. We're going in. Now, of course, we talk about the 11 o'clock, and that's just because I like that first half hour.
Yes.
10 to 12 is a big one too, but I love the first half hour, and that's why I like these 9 to 11.
I agree, man.
I put them on prior to 9:30.
Right.
That's what, because all the move is right there, and then I give myself an hour and a half.
Yeah, I want to switch gears in a second.
Okay.
You're telling me that you put some trades on at 6 o'clock at night, right?
Yeah. That's because the all of them open back up, and that's what, these go daily.
Okay.
And then if you want to get back into them, they're all open again by 6 o'clock.
Right.
And so what I've said to you before is sometimes you catch it at night, and sometimes you get in the morning and you've missed a big part of that move. And so there's nice risk rewards sometimes, right?
Okay. Well, we'll talk about that next week. Let's bring up a binary right now for the 4:15.
So here's all our binaries. We're trading at 44.90 right now. So here's about the square middle of the market. We're seeing
where's the bottom of the? Let's look at the bottom of the market, because let's say that we figure that we're going to go back to the bottom of the market.
And where are we looking? This just gets so quick. So you're looking at like 44.80. Is this what you're talking about?
Yeah.
Okay. So
because they should be really cheap right now, right?
Yeah, we're gonna get 2-1 on that. That's a 10-point Nasdaq move. That's okay. But that's still a great trade, like you're saying. Now you're getting 2-1 if it makes that same move. Whereas in the spread, we're just getting our money back if it makes that move.
Right.
So if we were gonna sell one at 68, would be risking 31.75 to make 68.25.
Okay.
Which is a good trade though. That's 2-1.
Right.
It's over 2-1.
Right.
It's 2.33 to 1.
I still that
went quick.
The middle spreads.
Yeah. Doing
double up.
Taking the premium out of it is an easy way to go if you're just trading it.
Great show, man.
You too.
Appreciate the education.
Definitely.
You stay right there, folks. Basil Chapman's going to be coming back up next. Nico, Dave White, myself. Have a great one. Have a safe one. Good trade, man.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.